Welcome to Wall Street Sizing Up. You know, we're the only channel that helps you profit off the insider knowledge of the hedge fund bros. Today we're talking about trading strategies. That's right, trading strategies and how we use them unconventionally. In fact, we combine all 6 of these strategies. We use them with, I'd say, long-term plays or mid-range plays, what I like to call them. And we know that we can buy the dip. We know that we can scalp. We can do a lot of things with these stocks because we like them long-term. So with that said, let's get started. Let's talk about it. Jake hit the theme. Let's hit the casino. And they're off. We are talking about trading strategies. There's going to be 6 on the screen. Just full disclosure before we get into it, these are my opinions only. We are unconventional. We do not have a traditional institutional trading background. TA is one thing, right? But sometimes we let runners run. Sometimes we snipe. Sometimes we buy the dip. Other times we just never see the stock again. We combine these strategies a lot. It's kind of the way you feel about the stock, right? I would say this before we get started. I think that a lot of these strategies that we're going to lay out, the ones that work the best for us, stocks that you like long term and the stocks that you like medium term, like 3 months out, the next 90 days, right?
So that's what I was, huh? I was a guinea pig. Somebody you could test your theories on?
Yeah, and I was just a girl somebody picked out in a bar.
You'd be very surprised that we literally pay hedge funds and institutional funds, right, to manage our money at a 2 and 20 rate when their most popular stocks are the ones that we could keep in our own trading account, like Amazon, Facebook, Microsoft, Alibaba, Visa, PayPal, Love Shop, Walmart, Teladoc. I mean, I can go on and on and on. Visa. The first trading strategy is the news. We all know what this is, right? He who has the news first is probably going to make a profitable trade before that news can move the market. Full disclosure here, we have an SMS alerting service, right? When large hedge funds size up and they make large trades, right? They have to file a 13D and 13G. We alert you to those if we believe that those trades could still be in the money. For example, if they get 10 days to file that 13D, 13G to the SEC, right? So for example, if it's within that 10 days, if it's already pumped and come back down, not a good stock. If it's gained 4, 5, 6% and it looks like it's in an uptrend, we'll let you know about it. So we use a lot of these strategies, again, that you're going to see combined with the news trading strategies in our SMS, right? If you want to get more information, it's at sizingup.co. So news trading strategy involves trading based on news and market expectations. We understand that. Traders will need to assess the news immediately after it is released and make a quick judgment on how to trade it. That's what we do. We just give you the information, and whatever your risk tolerance is, whatever your risk management policies are, you have the information before most of the public. And that's what we do for you. And really, that's why you invest your money with hedge funds and institutional investors and investment funds, is because they typically know before these news and announcements come out. That's their job to know, right? Just make sure you treat each market news release as an individual event. Develop trading strategies for specific news releases. Again, some of the stocks you're not going to like it could be industry specific. Like we love biotech. It's got a high beta. It's very volatile. It can move up and down, but we like it because we like to size up. We like to trade heavy. And if we get 2-3% up, we're out. If we're 2-3% down, we're out. We lost money or we made profits, and that's kind of what we see. The model is it's better to travel than to arrive.
Release the brainstorm to make your motherfucking brain warm. A strange form, something kind of lyrical.
Which basically means the model suggests that it can be better to trade on price action before the announcement. Again, this is what hedge funds do for you. You can trade almost anything. There's multiple opportunities in news, in commodities. One of the things that I would say up front too is we're going to talk about this scalping at the end. We scalp everything, right? Because you never know what the next day is going to bring, right? And so if you're sitting there and you've got through that day, or maybe through a swing trade, which is multiple days, or just a multiple day trade, and you're up $100, $200, $300, $500 in a trade, we scalp that. We take those profits and we put them in our pocket, right? Because you never know what the next day is going to bring, right? It's what's called next day risk, because a macro event, the vaccine could absolutely fail, or the stimulus package has gone through and boom, it's up more, right? You might miss out on some profit. You never know. But for the most part, you're protecting your downside. Next one is the swing trade. Now, a swing trade, as I first learned it, was a multiple day trade. But a swing trade, from an institutional perspective, is one that you just buy the stock or you short the stock, right? They don't care. That's a swing trade, right? And it could be a multiple day trade. Additionally, swing traders will need to identify trends where the market encounters increasing levels of supply and demand. That's the level 2, right? So when people talk about level 2 trading and looking at level 2, there's a buy wall and a sell wall, and you can kind of see if there's more supply versus demand, the price is going to move. You can tell which way the price is going to move, and that's what the level 2 is. And if you're a serious trader, not just a part-timer, we just are part-time traders here. I don't have the time. We have an e-commerce company. I've got the SMS alerts. I like to make videos, but certainly if you're a day trader, you need level 2, right? So that's swing trade. Again, it's a viable hobby. You do take the overnight risk. You're going to be a long-term swing trade. You really need to know that company well. That you can get out when you want to get out, and you can enter when you want to enter with less slippage, right? So next is the day trading strategy. Now, we are not day traders here, and I'm really not going to talk a lot about it, but I just wanted you to know that day traders often hold multiple positions open in a day, but do not leave positions open at night in order to minimize risk, thus the overnight risk. They want to de-risk all of their trades, right? But if you're going to get into day trading, you've got to understand, and you want that to be the way that you're going to make your living. That's going to be your career. I understand that, and that's cool, but your eyes are going to bleed. It's going to be a grind. For 6 months to a year, you're going to learn. You're probably going to paper trade. And here's the thing. There is literally no better way to learn than to trade your own money. I'm not talking about buy 100 shares or buy 1,000 shares. I'm talking about buy a share or two and just break into it. So, because when you trade your own money, it's different than paper trading. I don't care what anybody tells you, what all the gurus say, whoever it is, Tim Sykes. I'm actually a big fan of his, but paper trading is one thing. But when you trade real stocks, and you need to do that before you get into a day trading career or want to, you got to understand. You need to understand too, as a day trader, there's a lot of study, a lot of self-research. You just need to understand this, and literally that takes about a year. It can be a very rewarding career. You work when you want to work. That's the best part of day trading. You work when you want to work. You don't have to trade that day. I would say this though: the day traders that I see that do the best, that means they make the most money, because that's why we're here, are the ones that size up and they trade heavy. That means they take large positions, and when that stock moves up 3, 4, 5%, they're out. If that stock moves, if they're sized up and their setups didn't come to pass, and they're in the trade and it moves down 1 or 2%, they cut losses quick. They run with the winners, but they cut losses quick. Boom.
Come on, come on, come on!
Rika, enough with the dynamite already.
That is day trading in a nutshell. There are hundreds, if not hundreds of thousands of videos on YouTube that you can watch about day trading. So I don't want to say too much more than that. Trend trading. All right, so this is the momentum trade. This is what we do a lot of, right? The trend is your friend, is what they say, all right? It's one of the most accurate mottos in the business. Following the trend is different from being bullish or bearish. You're following it down if you're if you're trying to short that stock. But if it's if you just bought the stock and it's in an uptrend and it does a little bit of dip, you can buy more shares. That's why we like to trade with long-term stocks, right? With the big stocks, with stocks that we know are in, especially in this bull market, that are in an uptrend. Because if we are going long-term and we're doing a swing trade and we're not going to scalp profits for that day, which we probably would, but even if we don't, we know that, let's say we take the overnight risk, the next day it's down 5, 6, 7%. We just buy more shares because we know that stock's in an uptrend. Typically, your bigger stocks like your Apples and your Facebooks and your MasterCards, your Netflix and your bank stocks, right? They're not going to move more than 5% up or down, typically, right? Now you start getting into some of the Russell stocks, which is the small cap stocks, and those can absolutely move, 10, 15%. And then if you get into biotech, you'll see things go down 40%. You'll see stocks pump. I saw 2 today, they're up over 100%. It's very risky, but you can make a ton of money in it, but you got to understand what you're doing.
Never go in against a Sicilian when death is on the line.
So we follow the trends. And so again, if it's up 3 or 4%, we'll take some profits. The next day, if it's down 3 or 4%, we start buying it back. That's what trend trading is to us. I'm sure that means a lot to, it means different things to a lot of different people, but that's what it means to us. That is trend trading at its finest. Finally, scalping. You've heard me talk about scalping throughout this video. Essentially what scalping is that when you get into a trade, especially if you've gotten one of our SMS alerts and you like the stock and what it's done, it looks like it's in an upward trend, which that's probably what the alert's going to be about. You're going to stick with it, right? And let's say it goes up 2, 3, 4, 5% that day. Scalp it. Take the money. So literally when a stock gets up $100, $200, $300 in a day, we typically scalp it unless we are really, really long in that stock, like an Apple or a Microsoft or a Facebook. But if it's a small cap to mid cap, we will scalp that stock. So it's up $300, we'll take it. And the next day it might be up 3 or 4%. Again, we missed out. That's okay. If you're putting profits in your pocket, you're not gonna go hungry, right? That next day, that overnight risk, it could have gone down 4 or 5%. Now we're buying the shares back because we still believe in that stock. So again, the overall approach here is that we use is that we like the momentum plays, we like to scalp, we like to use stocks that are good 90-day to long-term plays. And we like that we're in a bull market as well. That's kind of what we do. So understand that we do it with larger stocks like C and JD and Disney. We're in Netflix, Apple, all the FANG stocks. We're in Teladoc. We're in Shop. I think Shop's one of the top 3 stocks in the world. Walmart, Dollar General, we think is a phenomenal stock too. But anyway, that being said, guys, I hope you made it all the way through. That is our kind of philosophy. I hope you liked these trading strategies. I hope you liked what we told you about our strategies and actually added some color around what you can do with these strategies. Check us out at sizingup.co. That's sizingup.co. And cheers. We'll see you next time. Don't forget, watch your 6 and go hard in the paint. We'll see you. Well, good day, good evening, and whatever time it may be. We hope you enjoyed that video as much as we enjoyed making it. Please hit the like or the subscribe or leave a comment because we love that feedback. And you know what we say. At the casino, you got to watch your 6 and you go hard in the paint, guys. Cheers. We'll see you next time.